Hey guys, I hope you're having a great week. Markets are ripping higher, and I thought I'd share with you some thoughts today around a couple of industry sectors that are really likely going to benefit during the course of the next 6 months particularly. Now, I'm going to share with you those industries in just a moment, but let me share with you what's going on and the reason why we're seeing share prices rip back higher this week. Not suggesting that they couldn't pull back, or we couldn't go to a new low, but there are a couple of things right now that are starting to act as a tailwind for financial markets once again. The obvious one is commodity prices. Copper is down 36%, iron ore's fallen out of bed, oil prices are substantially lower than where they were previously. Housing starts, building permits, all of the commodities, all of the big ticket items, used car sales, all of the things that have been pushing up inflation, oil, they're all starting to fall. That is great news for financial markets, because what traders have been worried about is obviously high inflation, but the aggressive nature by which that central banks are likely going to need to raise interest rates if inflation was to stay high. Now, inflation is high. In the US, it's 9.1%, New Zealand is 7.2%, UK is 10%, Australia is somewhere around 6 or 7. We haven't got the latest inflation report recently, we'll get that shortly. But the bottom line is, if inflation doesn't come down, interest rates are just going to have to keep going up. And that's going to be a handbrake on share prices. But there's a couple of things in the second half of 2022 that are going to be a tailwind. They're starting to develop right now. One is that those commodity prices are down lower. When we look at prices like agriculture commodities, wheat is lower than pre-invasion levels. So before Russia invaded Ukraine, wheat was at a certain price. It's now below that price. So agriculture commodities have been falling. And generally speaking, if commodities stay where they are now or continue to go lower, which I think they will continue to go lower. In fact, I think iron ore prices are destined to go much, much lower. And in fact, I think all of the major miners in Australia are going to see their share prices significantly lower in the next 12 months. Lower dividends, lower share prices. A lot of Aussie investors are going to be very disappointed unless they've got the money in many of the businesses we're investing in. And I'll share with you those industries in a moment. But the second thing is money managers. So commodity prices are going to help inflation go down. That's going to slow the aggressive nature by which central banks need to raise interest rates. But the second thing is, I just mentioned it, money managers. Now, incentive-induced bias is massive in financial markets. Money managers don't get paid bonuses if they don't make money. Hedge funds don't get rewarded bonuses and don't get to charge their 20% performance fees, etc., unless they make money. So the first half of the year is often a time when they don't care. Second half of the year, they do care. They're going to rip these markets higher if inflation starts to come down. If commodity prices stay where they are, they're going to rip them higher. Now, two industries they're going to come into. Technology, because that's where the growth is, and the banking industry, because interest rates are going up and net interest margins are going to swell at certain banks. We've been buying them. We've been aggressively buying banks. We've been aggressively buying technology businesses in the last few weeks and months because of the probability of this outcome. So right now, guys, if you are not invested, if you've been sitting around waiting and thinking, oh, well, I'll wait for the lows, trying to pick lows, that's a fool's game to start with. You potentially have missed the boat already. Because if inflation starts to come down and central banks don't need to be as aggressive, then you will have missed the boat. You've got to get invested when prices are cheap. So markets ripped in 2020, 2021, second half of the year of 2022 is shaping up as being the time as well that I think we could see a really strong rally, particularly all the way through the Christmas. Money managers have got to get markets back higher for them to get paid. It's pretty obvious to me what's going on. Commodity prices lower. Inflation's likely going to come down. Interest rates are going to keep going up, but not at the same aggressive pace as what many people think. Recession fears are off the table. Consumers are wealthy. Get invested. Have a good one, guys. See you next time.